I am delighted to welcome everyone to today at the Summit. During this session, I'm going to be talking to Helen Dean, the CEO of Nest Corporation, the National Employment Savings Trust. I'll leave it to Helen to say a little bit more about the work that they do, but just to give you a bit of background to A4S's connection. Nest is one of the members of our Asset Owners Network through their chair. Our Asset Owners Network is a network of pension fund chairs and trustees working to embed environmental and social risk and opportunity into decision making. One of the things that we've been working with the trustees and chairs on is a toolkit, really intended to help those chairs to be embedding climate and other risks into the decisions that they take. And the intention is that they're very simple, accessible, and really tailored to that chair trustee audience. And one of the first pieces that we're going to be including in the toolkit is a case study from Nest, looking at how they are delivering a net zero investment strategy. So I'm really delighted to have Helen with us, and we'll invite Helen to give some opening remarks to talk us through their strategy. So over to you, Helen.
Thank you, Jessica. First of all, thank you for inviting me to speak at this important event about a subject that is of such critical importance to our industry and indeed our world. Many of you may already know Nest is a not-for-profit pension scheme set up by the government to help deliver auto-enrolment. We have nearly 10 million members. That's around a quarter of the UK workforce. And by the late 2020s, we expect that to have risen to about a third of UK workers having a pension with Nest. We offer a high quality, sophisticated investment strategy currently used to invest more than £14.5 billion of our members' money. By the end of the next decade, we're on track to be looking after nearly £100 billion of members' money. So we're very alive to the challenge of managing risk to our members' investments. Millions of our members will be invested with Nest for decades. Many people come into us in their early 20s and they don't leave us until their old age. Over this time horizon, we think that climate change will present significant investment risks for our members. It's our job to take a long-term view on how to protect our savers' money. A world ravaged by climate change will just be more expensive for our savers to retire into, meaning their pension won't stretch as far as it should. And while being a heavy polluter might not affect how profitable a company is right now, it certainly will in the future. For example, crude oil is likely to become too expensive to extract from the ground in the future. We're likely to see rising carbon taxes in many countries. Increasingly also, we're going to see a fall in consumer demand for fossil fuels. So this stuff is very, very important to the pension saver. A world experiencing a 4-degree temperature rise will also increase the physical risks to our portfolio, natural disasters, floods, those sorts of things. So at Nest, we've looked at all of those things and we've taken the view that we have to actively manage this risk on behalf of our members. This is about looking after our members' best interest. It's an absolute myth that there's a trade-off with performance or a clash with our fiduciary duty here. Investing responsibly helps to improve long-term returns, and it creates a world that our savers want to retire into. Well-run companies with sound environmental and social practices and good workforce practices just simply have a better chance of long-term success, profitability, and sustainability. Another factor is it's what our savers actually want and expect from us as an investor working on their behalf. We don't believe our members, who are actually typically younger than members of many other pension schemes. Nest, in terms of its membership, is quite a young pension scheme. Our members do not want to save throughout the whole of their working lives only to retire into a world devastated by climate change. They've told us that. We ask them and we survey them every year routinely, and they tell us every year that this matters to them. Also, if you look at the population as a whole, 4 out of 5 people in the UK say they want a green recovery from COVID. 65% of people in the UK say that they believe that their pension should be tackling climate change. So, as a responsible pension scheme, how can we say that we're working to give our members a better retirement if we simply ignore the world that they're going to be retiring into? The future is what pensions are all about. So this July at Nest, we announced that we are going to have a new climate policy to decarbonize our investment portfolio. We've set ourselves a goal to be net zero across all of our investments by 2050 or earlier, and we expect that carbon emissions in our portfolio will halve by 2030. We think that new policy sets out a very clear vision of where we're heading, and we are taking some immediate actions to help us get there. First of all, there are some business activities that we do not think can be aligned with the goals of the Paris Agreement. I'm talking about things like oil sands, thermal coal, and Arctic drilling. And we have decided to exclude those things from our investment portfolio. We can't do that all at once. So what we've said is all companies with more than 20% of revenues from those activities will divest from them by the end of 2020 or the end of this month. All companies with more than 10% of revenues from those activities will divest by 2023, and all companies with involvement in those activities by 2025, unless they have committed to a full, accountable and phased exit by 2030 at the latest. We're also investing more in climate-aware funds. So we've already shifted nearly half of our total portfolio into climate-aware strategies, and they positively tilt towards greener companies. We're now working on how all of our assets, not just equities, can become more climate-aware. And another thing that we're going to be doing is continue to exert strong stewardship pressure. If we are to successfully transition from carbon-based fuels to green renewable technology, we need the big energy companies to be part of that journey. They have an absolutely critical role to play. So we'll use our voice to pressure those companies to align with the Paris Agreement goals. If that engagement proves to be unsuccessful, if a company is not moving or they're not moving quickly enough, we will then consider divesting, but only then. We do think that it is important to engage and to be active stewards and to try and bring those companies with us on this journey. Over the coming years, we will continue to review what we're doing and check to see whether other steps are required. We very much want to actively contribute towards moving this important agenda forward, and that includes working on how the financial industry gathers data and implements change. This is a really fast-paced environment, and we want to make sure that we're constantly up to date with the latest science and the best practice. We'll be reviewing our climate policy annually, and our voting and our engagement standards on climate change. Of course, it's not just Nest that making these changes. Many other pension providers and investors are doing great things in this area, but I do want to call on those who aren't to follow suit. There are some really simple steps that you can take to get going. Step number 1, be very clear and set out your intent. Be clear about your goals, be clear about what you want to achieve, and be bold. You don't have to know at the start how you're going to deliver on every aspect of this. Let necessity become the driver of invention. At Nest, we've found it really helpful to set out our intentions publicly. That gives us something to start working towards. It gets us on the right path, and it's something to hold ourselves to account to. And that focuses the mind really well. Number 2, build your evidence. Make sure that you've got good numbers. Make sure that you've got strong evidence to back up what you're doing, because that will help you demonstrate the rationale for what you're doing, and it will help you get buy-in from your board and from your stakeholders. Step 3, choose the right fund managers and work with them. Having the right team of fund managers makes a huge difference. You need to work with them, and if necessary, you need to help them to understand why thinking about climate risk and indeed other ESG factors is so important. At Nest, we've found our fund managers have been absolutely vital to the progress we've made, and we found that they've been really open to these ideas. But it is very important for them to understand that this isn't just lip service for you, you mean it. It is really important for you as their client that these changes are made. Step 4, communicate with your savers. Communicating with members about sustainability is going to become increasingly important for pension funds. It also gives you a stronger license to operate. When you get input from your savers and they tell you that they support what you're doing, it gives you a great license to operate and a stronger mandate for action. I think also bear in mind it'll probably in the not too distant future be a very important marketing tool as well. And step 5, be a very active shareholder. By engaging with the companies that you're investing in, you can use your influence to bring about real change. By talking openly about what you're doing and by collaborating with others, you can also encourage others in the industry to take a similar approach. I'd like just to end by emphasizing that at Nest, we do not see this being about trade-offs between financial and non-financial benefits. Managing climate risk on behalf of your investors is a critical part of managing their financial future. In our experience, once you and your board have internalized that simple fact, actually the next steps become very, very clear. Thank you for listening.
Fantastic. Thank you, Helen. I am really looking forward to digging into a few of the things that you've said. You laid out for us some very clear, very straightforward steps that people can start with. But when you start to get involved and really think about some of the commitments that you guys have made, there are always challenges there. So to start with, I would like to dig into some of the challenges that you faced, and maybe to start with, in terms of getting buy-in. So buy-in from your trustees, buy-in from your asset managers, from your advisors. Did you hit any roadblocks there? Are there any other things that you needed to do to make that community comfortable with the direction?
Well, I mean, I could speak from personal experience here because I'm a member of the Nest board as well as chief executive. I'm a member of the board and a trustee of the scheme. So I was very much a part of this process. And as a board, and you need to start with your board, as a board, we strongly support everything that Nest is doing in this area. We do that because we looked hard at the evidence. And that really is key to this. Getting the right evidence for what you're doing, making sure you understand your numbers. If you go back to what the board of a pension scheme or a trustee of a pension scheme is obliged to do, you have a duty to use your powers for the purpose of the scheme, and the purpose of the scheme is to deliver retirement benefits. If you think about that, people join in their mid-20s, they leave in old age. That's a long-term investment horizon. We're not talking about weeks or months or even years. We're talking about decades in terms of an investment horizon. So as we thought about what we have to do to drive benefits for our members, seeking opportunities where they exist and managing risk where that exists, and as we looked at the evidence, it seemed to us compelling that there were, first of all, many opportunities from companies with good, sound environmental practices, those companies just simply have a better chance of success and profitability. They represent the way the world is moving, and we saw that as a real opportunity for our members. Conversely, when you start to look at risk and you start to think about companies with weaknesses in their approach to the environment, that creates multiple investment risks for our members. Member support was also important for us as a board. So 2/3 of our members year on year tell us that this really matters to them. And it's not just that they support us investing responsibly. They actually say that they expect us to invest responsibly. So board support just isn't based on personal views. It's based on a good, hard look at the evidence. We weighed it up, we considered it, and in the end, we concluded that the best way to deliver on our fiduciary duty to our members was to take a really active role in managing climate risk and grabbing climate opportunities where they just seemed to us to exist for our members. And of course, we had a strong mandate from our members to do that. That same process of evidencing, gathering the evidence, and being very thorough about that worked for all of the other stakeholders that we had to talk to.
And did you find with those fund managers and consultants and others that you did have to bring them on the journey with you? Or when you started that conversation, did you find that they had already done similar kind of thinking themselves and were coming to you with solutions, ideas, pushing you further? Which way did that conversation go?
Well, it varies. I mean, there's a mixed economy out there, and some people are further ahead than others. But generally, what we found from our fund managers was that they embraced this stuff. They were really keen. They came on board very quickly and easily. Many of them had already thought about those sorts of things anyway. Some of them less so. The ones less so, then we worked with them. It wasn't hard. It really does feel like this is the way the world is moving, and more people in the industry and indeed in businesses more generally are waking up to that.
Yeah, absolutely agreed. One of the other potential areas of challenge that comes up quite a lot is the challenge of setting long-term goals. And how do you really make sure that you're on track to deliver some of those goals, particularly in the current context where a lot of the information isn't necessarily there for all of the investments you might be making?
Yeah.
Hopefully that gap will close soon. But so how do you set interim milestones? How do you make sure that things are moving in the right direction?
Well, perhaps a bit perversely, but one of the things I would say very important to us at Nest is don't wait until you've got all the answers before you start. Because if you do that, you'll wait forever. If you hang around waiting to cross all of the T's and dot all of the I's, then you're going to be procrastinating on this for ages. So set a clear goal, hold yourself accountable to it. We set our 2050 end goal, and we said 2030, we want to halve our carbon emissions. They're big, hairy, audacious goals. They focus the mind really well. But you have to remember, these are real and present risks. We haven't got time to wait. We have to get started. And if we don't have all of the answers, it doesn't mean there isn't an awful lot we can do. So we got started, and we've already been able to do a lot. We've already moved 5.5 billion of our shares into climate aware strategies. That's just under half of our total portfolio. It's the equivalent of taking 200,000 cars off the road, and we were able to do that almost immediately. You know, what's not to like? We've set dates for divesting from those business activities that we think are inconsistent with Paris goals. Things, as I said, like oil sands and thermal coal and Arctic drilling. We'll be out of the companies that are substantially invested in those by the end of this year, and then gradually we'll work our way through the others. So there's an awful lot you can do just by getting started. What we're now doing is we're working with our fund managers. These are very positive conversations with them, and they are providing us with an analysis on how they think that they can align their funds with our net zero commitment. And part of that analysis will be looking to see what more we can do to track progress year on year. But it's really important to get started. Really can't emphasize that enough. Do not hang around, because if you hang around waiting for everything to be perfect, you'll just never ever start.
I think that's a very, very good encouragement for people to get going. You touched a few times on your beneficiaries, on the savers, and the encouragement that they have been giving you. Maybe a bit of a stereotype, but you mentioned that you have a younger community of beneficiaries than maybe some pension funds, but I suspect there are still some lessons in there for others. So I'd really love to hear how you've engaged with your beneficiaries on this process and how you plan to continue to engage with them. Particularly can be quite technical, engaging financial decisions. Often people really struggle to get their heads around it. So how do you make sure that you can have a conversation?
Yeah, I mean, well, as I said before, we know that our members want us to do this. Our members expect us to be tackling climate change. So that's a great place to start. And therefore, we start from the place that says communicating with them about these issues can be a great way of driving engagement and building member trust and confidence. And it's important to remember a lot of members of Nest, and indeed of lots of other pension schemes now, have been auto-enrolled into pensions. It's not like they made a conscious choice to join. They were enrolled into it. There's a lot of inertia involved, and many of them, therefore, don't always understand, fully what being in a pension scheme means. So actually driving engagement and getting people to start to think about their pension, do some of the important things like think about whether you're saving enough and switch on your online account. Those sorts of things are very important. They drive a lot of benefit from members in themselves. So knowing that people care about how their money is invested seems to us like a really good way of engaging with our members and really starting a conversation with them about their pension. How we do it, well, that's a work in progress, to be frank. We are testing out a lot of different ways of doing it. We're testing out different formats, we're testing out different channels, and we're looking to see what works and what doesn't work. We've done things like information on the website, emails to members. We tried personalized videos, where you get a video that's actually personalized to you, that talks to you about your investment. That one seems to work really well. When we do public announcements, we try to really put a spotlight on a debate and try to get some real kind of press engagement so that our members can see that and be part of that debate. So when we divested from tobacco, for example, we put quite a big spotlight on that. We got a lot of press activity. And I mean, I got letters from our members saying, well done, good on you. It's lovely when you get things like that from people, really good. Every year, we also issue a responsible investment report. And we make sure that we do a jargon-free, member-friendly version that our members can engage with. So work in progress, but test and learn is really important here. We are in the process of really understanding what works and what doesn't work. What we've learned so far, well, first of all, be bold. Start talking to people about this stuff because, my goodness, they are interested. They want to know about it. So be bold and start talking to your beneficiaries about these things. Secondly, I think you said, Jessica, language is really important here. For many people, these are quite new concepts. Many people don't really even understand that a pension is invested. So we need to explain new concepts clearly in plain English and avoid jargon. Another problem is many different actors across the industry use multiple terms to describe very similar things. And people get very confused about that. And I actually think we need to find a common language as an industry so we can start talking to people about these things in ways that they can understand. We also discovered that making it personal is really, really important. So you need to talk to people about the impact their money is having, and explain it to people in terms that they can understand, terms that they can relate to their experience. And if you can talk about local things that are local to them, investments that you're making that are local to them, people love that. That's fascinating to them. But test, learn, and test again. There is huge untapped potential here. You know, half of our members tell us that over the last year, they changed their behavior in some way to be more environmentally or socially responsible. But only 5% of them say they looked at their pensions and investments. Once people realize the difference that they can make to the environment or to society through their pension scheme, I think we will see an enormous shift. And of course, campaigns like Make Your Money Matter are going to make a huge difference here as people start to really wake up to the power of their pension. Once they do, I think people are going to demand that their pension scheme steps up to the mark.
Absolutely. And I do think that there's a huge power in the kind of technology that is coming in, and we've all been using more and more this year. I love your example of personalized videos, really, to bring it to life and help it hit home, as well as that touching on local investments and really joining the dots, which I think again this year is something that has really been important for people. We are getting short of time, so I might try and sneak in 2 final questions.
Okay.
The first one is coming to some of the examples you've given of what companies, what asset managers, what others in the industry need to be looking out for. More and more pension funds and other asset owners are adopting net zero investment approaches.
Mm-hmm.
So what would the key things that you would be looking to companies and asset managers, what should they be thinking about now to make sure that they are equipped to respond from the demands from the investment community?
Well, I think asset managers can just expect more of the same. You know, as you said, the biggest pension schemes are increasingly starting to announce net zero targets. There'll be more to follow. We can expect greater demands from asset owners who are setting out their carbon commitments, making demands on asset managers here, and also government regulation moving in the same direction. The Chancellor's statement on the 9th of November, very strong signal from the government that, you know, they are going to expect the industry and companies across the UK to step up and help the UK meet its climate commitments. So, you know, we've got our government leading here. Other governments will follow. I think we can expect the US under a Biden presidency to do the same. So asset managers, I think they can expect asset owners to be placing more demands on them. But frankly, from the conversations that we've had, as I said before, it's very clear that many fund managers already understand the investment case here. They already see the way the world is going, and they're already researching what more they can do in this area. In fact, for many of them, there's a real opportunity here, I think. You know, they can preempt this and they can go out proactively to their clients and start to talk about what they can do as a fund manager to help their clients actually manage some of these risks. In terms of companies, I think companies can expect the industry to increasingly expect more engagement. We like to know how our companies are managing climate risk. We're asking our companies about that. And we know that by doing that, we're creating more reliable long-term investments. Individually, that's great. We can make a difference. But as we start to see more and more of the industry doing this, it's going to be unstoppable. So, you know, you're going to get to the stage where companies who are seeking additional capital, whether that's through equities or bonds, they are going to be expected to demonstrate how they're transitioning their business to a more sustainable footing as a quid pro quo for getting that sort of investment. And board directors, I think, are also going to have to step up, and they're going to have to become much more aware of the stewardship process.
And to that final point on leadership and boards, we had at the beginning of the summit a discussion on some of the characteristics that we need to see from leaders. So as a final question, talking to fellow board members, but to other leaders at all levels in organizations, what would your key asks to them be?
Oh, I think you have to be bold. You have to be bold. You have to set out your intent, gather your evidence, be clear why you're doing things, but set out your goals, talk about them publicly. Do not worry about having everything finalized before you do that. Make a very clear statement. If you do, you will find a way. The most important thing, if I could leave you with one message, it is please don't wait until you finalize everything about your strategy. Set your goal out, make some first steps, and you will find that you will make enormous changes and things will just flow from that. As an industry, I think we need to work together. And as an industry, I think we can share an awful lot of best practice. And as an industry, we can make a huge difference to our society. And in doing so, we can get better returns for our members and our savers.
Fantastic. Well, thank you very much for sharing those insights, Helen. I think it's something that will definitely inspire and hopefully help others to follow your leadership. As mentioned, we will make sure that we share content with everyone in terms of the case study, so that walks through some of the things that you've talked about, as well as other parts of the Asset Owners Network toolkit that are being developed. So some we're inviting comment and feedback on. So looking forward to hearing how other people have been following in the same journey. So thank you very much, Helen.
Thanks very much, Jessica. I've really enjoyed it.